open sells, top of the day. Hope you guys swung some good deals from the other day's dump. There was a lot of incredible impulse moves. Some of them running like 40% in less than 36 hours. I think PopCat was one of them. So hopefully you guys got some good deals on spot and maybe some nice leverage longs. I mean, some of these coins, I can't believe how low they went. Like OP went to $1. Arweave here went to 16. I mean, Ondo went down to like 50 cents. These are large caps that just completely imploded, right? So a lot of bargains. I think the market is prepped and ready for another level up. It's black swan events like that will typically shake out people with no conviction, that just puke their position out of emotion instead of thinking rationally what's going on. And big money's usually using that as an opportunity to stack, right? So I don't see the market collapsing the way it did the other day. I think that was a very reactionary move. And if anything, it's added fuel to the fire. So everyone who needed those bids that was probably, helping the market come down or giving it a little push on the way down, they probably got the fills they want. And at this point, I think it's just poised to reprice. So hopefully you guys have some good entries. Today we're going to look at Arweave. We could start with the weekly liquidity model. I like to base my trade or frame it off that. So you'll notice two red boxes here. One is a high volume node, the other one is a reactive zone. High volume node is very easy for anyone who hasn't seen me plot this before, using a fixed volume profile from the beginning, the day it was launched, to present, and this is your composite volume profile. Within it, you'll see a blue bar at the top and the bottom. In between, that's your value area. That's where the majority of the volume is traded. 68% of the volume occurs within that range. And then you'll get a histogram showing where the volume distribution spikes and where it tapers off. So this would be a low volume node, and this one right here would be a high volume node. Typically in the highest volume node, you're going to have your point of control, which is this blue dotted line here. And that's a very important level. So, if price is above it and it's testing it, it usually behaves as dynamic support until it's not. And what you're noticing here is when it established in this cluster its initial support and then went parabolic, when it retraced back into the high volume node, it tried to hold it here 3 times until it broke down. And then it was behaving as resistance until you closed a weekly candle outside of it, and then it went parabolic again. From the lows, it did something like 1250%. Yeah, a crazy move. So that's why I'm saying I think Arweave is primed to be another market leader on the next half of the bull run. And I think it's better to go with coins that have already proven themselves compared to some of these new VC scams like DIM, Drift, all these other nonsense coins that are just going to have tons of supply overhang and VC sell pressure until there isn't, right? So coins like Arweave and Rune are kind of positioned well, where a lot of the coin is already in flow and in the circulating supply, and you don't have all that VC monkey business going on in the background at this point. So aside from the high volume node, you'll notice a reactive zone here, and that's where we basically dropped into and held. You could see that was a nice pivot here, and it was a nice pivot above there. So that's a pretty decent reactive zone, and if you bring it into the daily, you'll get even more granular detail. So you can see on the daily all those wicks confirming it as resistance before breaching and going lower. And right here, that was your first cluster before going parabolic. So we'll pop it back into the weekly, and you'll see here there was a weekly imbalance here. A lot of you guys heard me talk about external to internal. That's your external high. You could either call it that, or you could call it this one. Doesn't matter, it's the same effect. once you take significant liquidity on the weekly from the highs, you're typically going to draw into that weekly imbalance, which is right here. Now, the last or the bottom part of that weekly imbalance, you'll see there was a daily imbalance right there. And that's where we stabbed into and held. So I would suggest the downside from here is pretty marginal. I don't think it's going to breach below this, but if it does, at least you have a reasonable area to put a stop. So you're in this little fractal here, you're probably going to be looking for a long. You just got to, I guess, buy within discount of the dealing range and not buy the breakout. So more in this range, you'll notice I marked in a range point of control, range value area low, because this is a new range that formed, right? So from here where we entered the range to where we are, there's your value area. And you'll notice this is now, right here it was dynamic support, supported by volume. And now we're butting up against it. So because we broke below it and closed below, so until we break above and reclaim, this is still considered resistance. So you wouldn't be longing here. If it does this and reclaims, now you have a strong case to long. So that's going to be the first area of interest. Reclaim range value area low, and I think I would go long. Aside from that, you have one of my favorite setups here, where you have one drive down, that's tap 1, tap 2, tap 3. This is given smart money 3 opportunities to buy in this range before distributing higher. So that 3 tap setup is a pretty classic technical bottom, but it has to reclaim levels and create microstructure in the range before you confirm it. I'm just saying that this 3 tap setup is usually a pretty good setup, and I think CRV has the same one right now. So that's adding to the argument for a long in the range. Now, aside from that, a lot of you know I started in harmonics. That was the first, my introduction to TA. And I see everything in M's and W's because of that. So with enough screen time, you start seeing them everywhere on the chart, right? And it gets a little obsessive, but the point is you recognize wave structures and it adds to whatever your case is. For instance, we have this harmonic structure in here, which to me is pretty clean. If you apply the range, you could see this low was rated here at the 113. So we open this wave, we had a corrective retracement of 50%, drop to the 113, which is aligned with a shark harmonic, and then the projection would, we're speculating it'll go to the 886, but if this is a proper harmonic, which it's kind of shaping up to be, 886 would be where you would plot on the harmonic wave. The last part is within this PRZ potential reversal zone is I'm creating this tight zone here where I'm targeting for the move up by projecting out the B to C fib. So if you open your fib from B and you anchor it at C, you'll notice your projection 1618 is right here. So I'm basically creating, this is my potential reversal zone between the 886 of the harmonic and the B to C projection at the 1618. So you have a very tight zone to target on the upside move. And then what I look for in that reversal zone or target zone is liquidity. And those 4-hour equal highs are resting right at the 1618. So this zone right here looks like a really good zone, kind of like down here, the 113 would have been a good zone after rating this and rebalancing the weekly. So if weekly liquidity and the harmonic line up, I give that more value than just a raw harmonic or a raw liquidity target. If they're both pointing in the same direction, more or less the same reversal zone, then that strengthens your argument, right? So that's a harmonic target. And now we'll go into intraday just to frame where you would take longs. Alright, so let's go in here. So another thing I look for with a strong potential reversal is all these failed swings. These are going to be liquidity for the move up. So because none of these swings took out the previous high, that's all going to get targeted, and shorts are going to close on the way up. They're going to be pressured to close on that move. In the range, there's not a whole lot of data just because we had a really inefficient dump, but I like to start with anchored VWAP from the low. And you can see it reacted off it here. So algos will be programmed to react off the anchored VWAP just because it's a logic you could program to any bot quite easily, right? It's not like an interpretive condition. You just put in logic and it's very rigid. It's easy to follow. So it reacted here. So what I would expect or look for anyways is any pullback, because this is now extended the same way this was right here. I would wait for a pullback back into VWAP, and then you'll see there's this internal low right here and an imbalance and a cluster. So everything is kind of lining up for that VWAP to kind of flatten out here, take out that low, and then potentially reverse from there, continue trend. So that's going to be my entry 1. And again, I would wait for this type of fractal to play out. So if we drop it to the 15, you'll see our first interaction with VWAP was here, and then you're kind of consolidating in the range, and then you're creating these two internal lows and then taking them out, and then you get this big bullish engulfing candle back above VWAP, and that's your trigger to go long. So I'd look for something very similar to this fractal. So something like this where, you know, it hits VWAP, reacts, creates more liquidity with relatively equal lows or internal range, takes everyone out, and then engulfs, and then starts getting bids. So similar to that somewhere over here, I think that could be a pretty decent entry. The next best entry, which I prefer just because you would have a deeper entry if we got it, would be down here. This is your 4-hour order block, and you could see the displacement coming out of it. So that was a really strong area for bids. Inside of it, you have a 1-hour imbalance right there. So combining the two, you have a pretty decent entry here for entry 2. But again, I would let price drop into it and not have limit orders here just because you have open wicks and they could target that and flush everyone out before, you know, your bid might hit and then they just take it out right away. So it's a bit of a risky limit buy. I would let it base. I went a little crazy with that, but like I would let it base, maybe raid one more time, and then just somewhere here you would look to get in. So those are the two areas of interest within the range. And target wise, pretty simple. Not sure where you're going to enter, but let's say you have something like that. You're going to target these highs right here. That's going to be a 66% move. You would target that 4-hour liquidity pool, 127. These highs, 140. And if things get really weird, your weekly target is going to be up here for like 232%. And you never know. Maybe this one is like the injective of the second half of the cycle, right? A lot of these coins, you don't know what they're going to do in advance. You get a few big accounts start pushing them, a couple funds get behind them, and they could blow out everyone and then just create new all-time highs. You never know. But this one looks very interesting. Hopefully you guys got something from this. I'll catch you guys on the next stream. Cheers.